me okay. I'm very excited to be joining this webinar with NAMOS, our gold partner here, and welcome to the Smart Student Number Planning webinar. There's two reasons why we've decided to really do this webinar and webinar series. Oracle have 25 plus years experience in higher education, and we pride ourselves really to understand the needs and challenges of universities. And due to the evolving landscape, so should I say, within higher education, it has become evident of a growing need for universities to address the need for better insight during their student number planning forecasting and budgetary requirements, and also you could say a need to do away with spreadsheets, which generally are solely relied upon. The other, which is also a very pertinent issue, is more knowledge of partners and how partners can help them on this journey. So we hope that you'll get insight from today as well. Just before we begin on the agenda, I want to sort of go over some housekeeping. This webinar will be recorded, so you'll have an opportunity to review what's going to be discussed and shown to you today. There will also be a Q&A towards the end of the webinar, so I do ask to have some questions in mind for you all, because obviously, as well as we showing you what we can do and how we can help you, we also want to hear from you as well, which is the most important thing. What I'll also say is to help us stay on time with the webinar, you will all be on mute, but obviously if you do have questions during the webinar, feel free to put them in the message window, so hopefully you'll see an icon for that as well. We'll be sure to capture those and make sure obviously they're asked during the Q&A session, which will be later as well. So we'll just move on now to the agenda. Okay, so what we're going to have is we're going to start off with introduction from NAMOS. So they'll obviously explain a little bit about what they do and their expertise in this area. There'll be a 20-minute demo of our planning and budget solution with my colleague Graham Cardwell. Then also Jonathan Talbot from NAMOS will talk a little bit more about the ease and considerations around implementation. And then, as I said earlier, we'll also end with a Q&A with a call to action as well. So please don't be shy during the Q&A. You can ask questions via the messaging window, or obviously you'll be on mute and you can ask them vocally as well. Without further ado, I'll hand you over to Mike Waite at NAMOS to begin. Thank you.
Hi, thanks, Tony. Thanks, Tony. So I'm Mike Waite from NAMOS. I just want to give you a quick introduction into who NAMOS are. We're Oracle Gold Partner, Oracle's #1 partner. We've got lots of experience in the HE space. We've won lots of awards from Oracle and from the Oracle user group. We only do Oracle, that's all we do. We've got lots of experienced consultants who can help with the implementation. Currently, we're working on the implementation with Staffordshire University, which you may have heard of and some of you may have spoken to. And we're available to come and help you and support you through any of your implementations across any of the Oracle products. I'll now hand over to Graham and to do his presentation.
Hi, can you now hear me? I think I may have been on mute there. Thanks, Zara. I may have been speaking to myself for 20 seconds. So I'm Graham Cardwell, and I'm going to walk you through the process of student number planning within the planning and budgeting solution. I'm going to give you a demonstration of that, and then we're going to get Jonathan to take you through some of the implementation pieces, and also potentially take you through some of the more pieces around expense planning, which may follow on from this. But I should say there is no requirement to do expenses planning. This could just be student number modeling on its own. So let me move on. And I'm going to take you through the process that we're going to use throughout this demonstration. And what I'm looking to do is, first of all, input student number targets, either by campus within the university or for the whole university. So this is very much entering a high level number target. In this case, I'll be entering numbers for the next 3 years. I'm then going to calculate some retention rates, and I'm going to use something called Predictive Analytics, which is embedded within the application, to actually work out what those retention rates are going to be based on historic actuals. I can amend them, but I can just get the system to use that predictive capability and then use those numbers within my model. Once I have those student numbers, I will then allocate those numbers over the planned duration, and I will allocate the student numbers down to individual faculties or departments. Once I have that allocation done, I'm going to use some embedded assumptions for tuition fee revenues and other revenues, and I'm going to calculate the total income or revenue for the university over the life of my model. The piece that, again, Jonathan is going to talk a little bit about after is potentially the process would then move into setting workforce requirements, so working out what my workforce costs would be, calculating any fixed and variable costs, allocating any shared services between the departments, and coming up with the net position for the campus or university. The other thing we can do within the model is always generate different versions and do what-if modeling, change any of the assumptions, change the targets in a different scenario or version, recalculate the numbers, and then compare and contrast those different what-if models whenever we like. Now, behind this, to do that modeling, we're going to have the capability to model and analyze across many dimensions. So I'm going to represent that capability just as a cube. And within that cube, I'm going to have the potential to have these many dimensions. So things like an entity dimension, which will hold my campus or faculty or departments or cost center in the case of shared service allocated costs. I will also have an account for my subjective, so profit and loss, balance sheet, cash flow, student numbers, KPIs. I'll also have year and period, and potentially any other dimensions, things like program and course, employee, where I get down into my employee workforce expenses, or project. And on top of all those dimensions, I can build hierarchies. So I can aggregate data up across those dimensions to then see the aggregate totals, or dice and slice across those hierarchies or dimensions. So on that basis, let's look at a demo, and I'm going to log into my application. And as I log in, I'm presented with a dashboard or a landing page that gives me the ability to kind of move through the application. Now, to make it simple from this demonstration perspective, the process that I talked about within the PowerPoint slide, I can generate a task list within my planning system that actually walks me through all of those stages. So the first part of that process was to do my tuition and fee revenue planning. And so if I enter that piece of the process or the task list, then the first piece I come to is my campus enrollment. And this is where, as I said, within the process, we would input the numbers or the targets that we want, in this case, for Campus 01 within my demonstration university. And so the yellow cells that are highlighted in the screen, I need to type in the targets that I need. So to speed it up, I'm just going to pre-fill those. And once I have those targets, I can then save those targets, and it will calculate down those numbers. So we've got the targets in place. The next part of my process was to go through and calculate some retention rates. And if we're looking here, I'm looking again at my entity Campus 01. And in this case, I'm looking at the resident retention rates. We would potentially have different retention rates for different programs. So overseas students may have different retention rates. We can make those retention rates, again, around those dimensions as granular as we like. I have historic actuals for retention rates. And what I'm going to do with those historic actuals is use this thing called Predictive Analytics to actually look at those historic actuals, and using time series analysis, predict for the next 3 years by individual time period what we think or what the system thinks those retention rates are going to be. Within the data, if there are any outlying data cells or any missing data cells, then the solution will kind of plug those gaps for me in effect, and also highlight, as in this case, that there is an adjusted outlier, so that I can go and investigate that data cell if I need to check it. It will give me the prediction, it will tell me the potential growth rate, it will also tell me which statistical methods it is used to predict the data, and usefully, it will give me a measure of accuracy. So in terms of the data set, it's seeing something like a 95% level of accuracy within the data. Once I have that prediction calculated, then I can paste those numbers back into the data form. So I can paste forward the retention rates for the next 3 years, again by period. I can then save those retention rates, come back to my campus enrollment, and now I can apply those retention rates to the target numbers that I'd set in that first stage. So I can get the system to calculate then what the different programs by resident, by overseas, and the total resident overseas for each year of the individual types of students, then the numbers that we're going to see coming through the model. So we've entered the target, we've calculated the retention rates. The next step was to allocate those numbers, again, for that high level target, down to individual departments. And in this case, I've got a couple of options. I could allocate on the basis of student numbers by previous year actual by department, or by the current year budget. Again, these are options that you could control and have within your model. I'm going to allocate the numbers down by previous year actual. And then when it does the allocation down, we'll see now that it's allocated those target numbers, target student numbers, across the individual departments. And again, we're now seeing, in this case, residents. So the program is for resident students. And we're looking at the freshmen, so the number of freshmen that we have within that particular budget year and individual semesters. From here, I could also drill to individual programs, and I'm going to do that in a second. But before I go there, I could also, we're looking at freshmen. I could look through, again, this is this dice and slice capability, where I could move through the account here for the individual types of students, whether it's returning students, second year, third year, fourth year, or graduate enrollment or undergraduate enrollment. So I can always kind of move through this model quickly to dice and slice the data. And then that final thing, if I want to drill down, I can go beneath the program level, or down to this program level beneath the particular department. And if I drill down to the program level, we'll see then within Department of Accounting, we have a couple of programs. Now my model in this case goes down to program. It could easily go down to course level. And then within these cells, again, this is my target number that's been allocated down from that high level target I put in right in the first place. I could easily override any of these allocated numbers. So in this case, if something like the taxation and MST program, we have no students currently. This could be a new program that we're planning to run. So I could enter the data, just plug those numbers in, and that would be an addition to the target number that I have. I could always reduce the number of students in any of these programs as well, and then recalculate the numbers. Once I have those numbers done, I'm then going to calculate the tuition revenue by department. So from the student numbers, it's going to take those underlying assumptions that I talked about for the fee package and any other revenue implications, and it's going to calculate out the total revenue for me, again, by the individual departments, and aggregate everything up to Campus 01. So we'll see the total revenue implications for the whole of Campus 01. Now this is for a baseline version, and I mentioned again in the PowerPoint up front that we could have many different scenarios and versions. So again, from here, I could, and I'm not going to create a what if, I've already created it just to save a little bit of time for this demonstration, but I could easily create a what if version or as many different what if versions as I like. So if I create a different version, I could then change the target number of students. I could change the course mix. I could change any of the revenue assumptions. So each scenario or each version could have different assumptions plugged into the model. And then we'd be able to recalculate that different version. Once we've recalculated that different version, we then have the ability to go in and compare those different versions. So just to illustrate that, if I go to this comparison, here I'm going to compare my baseline set of numbers. So my total tuition revenues for baseline is then compared with a what if model that may have been looking at different retention rates. What if my retention rates reduced for some reason? Therefore, what are the impacts on my total line revenue? So in this case, the green cells are indicating that actually my baseline case is still in excess of the what if case. But again, we could be looking at different kind of versions, different comparisons, and then analyzing it in a much greater level of detail to find out how do we get to those numbers. So that's a quick run through that process. Once we have all that data in and we've calculated those numbers, we've seen the data on data forms, but we also have the ability to see the data via dashboards, which we can configure. And so just as a quick example of one of those dashboards, again here, we're able to dice and slice through the data. We're able to graphically represent the data. And we're also able, so in this case, we're looking at those student numbers across the different years, and we're looking across the different departments. If we want to, we can also drill in. So in this case, I'm going to drill into School of Nursing. And when I drill into School of Nursing, it will break down that data into the individual numbers of students, in this case, total enrollment for resident students just within the School of Nursing, but within the individual programs within the School of Nursing. So the dashboards allow me to take any of that data and then build my own custom dashboards that I can then use to navigate through the data, analyze any of the data, and multiple users obviously navigate through it. So that's the end of the demo. I'm going to pass over to Jonathan, who's going to take you through the next piece of the process.
Okay, thank you, Graham. And now I'm going to go on and talk about more of the department level planning. So once the numbers for the students have been created, it's then move on to department planning. So things like costs within your department. So with our clients at the moment, this is where we've started our journey on PBCS. It's flexible where you start your journey. Some universities will start with a system to develop the student numbers and revenue. Some universities prefer to start on the costs. Due to the time of year we're doing this, it's more the time of year they've been looking at their costs, and they wanted to start on those, especially with employment costs. So in the majority of cases, for any university, the highest cost is of employee costs. For most universities, this is 70 to 80% of their costs. So PBCS has a number of different workforce models. Workforce is what we call our employee level planning. So you can plan at a variety of different levels. You can plan at a very high level position budgeting model, or a very detailed down to individual named employee level. Using PBCS makes it a lot easier to calculate these employment costs, and it also makes it a lot easier to complete any reorganisations within the university and see the impacts of the costs of reorganising your staff across the university. So I'll just show you a screenshot from the application here. This is where we are doing a high level people budget. So here we're basing it on position rather than individual employees. So if you see here, we can calculate how many of each position we will have in our Department of Biology. So we can calculate the number of professors, the number of admin assistants, associate directors, etc. We can also maintain a list of how many positions are open and how many positions are occupied and how many positions are vacant. And we can also request new positions be added to departments. So when you request a new position, this can go through an approval process through the system so that you know any positions that have been added are actually approved and you are able to hire those people. At the moment, with our current client, we're doing a very detailed model down to employee level. This works with the usual grade and band system which universities use for employees. So it does things like it automatically calculates grade increases and band increases during the year for employees based on their anniversary dates. It also calculates other non-pay benefits that your employees may receive, such as life insurance, such as pension costs, which I know are a large issue for universities in the UK at the moment. So using a complicated workforce model in PBCS rather than spreadsheets makes modelling these cost changes of things such as pensions a lot quicker and easier to do. So as well, once we've completed the people budget, we can also look at our costs other than people. So there's a variety of other costs in the university, the cost of buildings, the cost of utilities, etc. These can be calculated in many different ways. So we can use driver-based models to budget costs based on information we have, such as FTE in a department, such as headcount, and such as student numbers, and many other drivers. By using these drivers, we can build zero-based budgets to generate the costs throughout the university. We can also calculate these costs based on history and then rephase these costs using a variety of different phasing options. The university we're working with at the moment very much base their costs based on history and use rephasing to rephase them across the next budget year when the cost will actually impact the business. We can also directly input costs into the model for costs that cannot be calculated through drivers or calculated through history for new costs and one-off costs. Once we've got all our costs together, we can then help to allocate those across the business. So we can reach a more accurate budget across the business and actually see the costs of running various different courses and running various different schools across the business by allocating costs such as HR, finance, IT, and facilities costs. PBCS is flexible in that you can start your model anywhere for building your university's budget. At the moment, as I said, our current client has started with a cost model based on employees. Our intention then is to work through their non-employment costs, then move on to the revenue side to calculate our student numbers and the revenue based on those. And in the phase 2, we will then be implementing balance sheets and cash flows based on the income and expense budget that we've already created. We've talked about budgeting so far. Also, forecasting is built-in functionality, so you can conduct forecasts as often as you'd like, whether that be on a monthly, quarterly basis. You can also do rolling forecasts, which work on a rolling 12-month or 18-month period to calculate your cost on an ongoing basis, because some universities now are moving away from a formal budgeting process and going to a more flexible forecasting process, which is continuous and getting the costs and revenue into your system as quickly as possible. Our next slide just shows some of the reporting we can get out. This slide shows our budget that we've created, and we're comparing it against our actuals during the year. Your actuals can be loaded from any ERP system you currently use. It doesn't have to be Oracle. We've got lots of customers who use PBCS, but also use non-Oracle ERP systems. So here we've got our actuals have been input into the system, and we're comparing those against our budget and entering forecast numbers. We're also keeping records of any encumbrances and any available funds that we have, which then gives us a forecast versus budget output. Thanks for attending the call, everyone, today, and we'll pass on to the Q&A session now.
Thanks for that. Okay, if anybody's got any questions, if they could enter them onto the chat box or just speak up, and we'll free up all the microphones now, and you should all be able to talk. Any questions from anybody?
Hi, Mike. It's Graham. There is one on the chat from somebody, from Alex, which is, how do you allocate out target numbers? Is there a suggested method? In the demonstration, I used two options. I built in two options. One was to use previous year actuals or last year actuals, and the other one was to use current year budget. That's just an example. So in effect, you can allocate out those target numbers as you like, and that's where we're doing a kind of top-down version of the numbers. You could also do a bottoms-up version of the numbers and then see where the difference is between the two. But the allocation rules are pretty much as flexible as you like. As long as you have data in there, you can then allocate out those student numbers on whatever basis you have data.
Yeah, to back up what Graham says, there's lots of different methods. We can go down to as low level as you like and allocate them out based on, as he says, history. We can also enter manual allocations percentages into the system if needed, especially if you've got things like new programs starting, so you need to allocate out manually to those new programs which have not got history as well. But any allocation method you'd like to use, we can build into the system.
Any more questions from anybody? Okay, I'll pass on the slide to Tony to wrap up then.
Thank you, Mike. Can everyone hear me okay?
Yep.
Brilliant. So one of the things that, first of all, thank you all for joining. I wanted to talk about the call to actions was, if this is of interest to you and you want to know more, NAMAS are running sort of one-to-one workshops and meetings. So do reach out to them, and their contact details will be on the next slide. We are also planning an ERPM event, so it's going to be a little bit more deep dive again around what you've seen today. That'll be on the 3rd of October. So again, we'll send an invite to you all, and obviously we'll welcome you to attend as well. Lastly, there'll be an opportunity to meet with our product team. So this is a great opportunity again to experience what the roadmap is, ask questions about our future developments within this particular service as well. That's pretty much it from me. Please do feel free to reach out to either myself or Mike if you want to know more, and certainly we'll be happy to discuss further with you. So many thanks for your time. We're going to be afternoon, and I hope you found today very insightful. Thank you.